We're going to start, and we're going to say, mentioned already, this is real world stuff, right? In the real world, what happens? If you make mistakes, you can be held accountable, you can be liable for your mistakes. So what we're going to do is go through part of this training, and part of what you're doing here is going to allow us to come under what's called the Volunteer Protection Act of 1997. What does that mean? That means if we make a mistake on a person's income tax return, and we do it inadvertently, but it's a mistake anyway, that we will not be held liable, provided we go through a series of processes and procedures. One of those is training, another one's exam, and so forth. And you have to sign a statement saying you went through the training and you passed the exam and all that. Right? That allows us then to essentially I'm going to say, take the liability off of me or Professor Harrison, whoever's going to be responsible for the end product, because there's a CPA certificate hanging on this thing somewhere, right, in the IRS. So this is an IRS approved site, so we have to follow all the federal rules, and one of these federal rules is going to be that we have to take this federal income taxation test, and then you got to learn something about the foreign students and scholars tests, and then they're going to want to say, did you really do it? Now, I don't have that form. It's probably on electronic or something. Aaron, do you know how they get that? Have you done it already? The 13, 615?
Yep.
Okay. So these guys, the student directors, have to maintain, if you will, a certain set of records. This site has been audited by the IRS, I'm going to say, at least 3 or 4 times in the last 5 years. And they come in and they look at what we're doing and they look at their books and records and they say, are you operating in accordance with the rules you said you were going to operate under? So these folks will have some kind of a record, a notebook or something, with all these little 15 forms in them, and then that's part of what you need to do in order to be certified by the IRS. Any questions on that? So we got to do all that stuff. Confidentiality. Whatever you learn from a client about their tax position or situation or cash flows or whatever, you are required to keep that to yourself. You cannot share that with anybody else. You can't share that with the IRS agent. Probably shouldn't share that with me unless we're trying to answer a question and trying to figure out what the right answer is. Can't go outside in the hallway, go down an elevator and say, did you see that? That guy got $6,000 of a refund. Let's go out to drink with him, right? Because he can pay, right? Can't do that. Okay, so you have to keep things confidential. The other policy here is we have to basically prepare tax returns for anybody who comes in, right? So this is a non-discriminatory kind of situation. If somebody comes to our door and they say, hey, we want you to prepare our tax return, and they meet our requirements, we have to do it. We can't turn anybody away for some reason. So we have to be more or less, say, in compliance with whatever our preparation rules are. If there's ever a question about whether or not we should be preparing the client's tax return, we should bring it to the director's attention fairly early on. Because they can make a decision in terms of saying basically that's outside of our scope, and you don't have to worry about people standing in line and waiting for somebody to talk to them and then find out later that you really can't prepare it. So if there's a concern whether or not the person that's coming is within our scope, we should let the directors know right away and they can handle that. Okay, let's talk a little bit about the tax positions here. Who's subject to U.S. income tax? Right, so if I'm a United States citizen or a resident, clearly I am subject to the United States income tax. We have a worldwide system, so I'm going to pay tax on the income that I earn here. I'm going to pay tax on the income that I earn abroad. If I earn that income abroad, some country might tax that income, and basically I have to pay an income tax to that country. I still have to report that income on my U.S. tax return. The benefit I'm going to get is I can use maybe a foreign tax credit, or maybe I can take a deduction for the tax that I paid that foreign country, but I still have to include the income that I earn in that foreign country in my income tax return for U.S. purposes. That's really important. So if you're a resident, that means you follow the same rules as a citizen. So if we have a student that's been here for 6 years, that student by definition is going to be a resident. That student needs to report their worldwide income. We have a lot of students here from a lot of different countries that come from, it's expensive to go here. And so we don't know anything about the student's family, situation in terms of their financial situation. Family might have a ton of money. A student might have a trust someplace with funds coming in. A student might have investments someplace. We don't know any of that. So we like to err on the side of caution, and that is, if we have the opportunity to prepare a non-resident return and the person qualifies for non-resident status, a non-resident has to do what? Pay income tax on the income earned in the United States, okay? So non-resident, you don't have to report their worldwide income. So it's safe, if you look at it from my perspective, for us to prepare a non-resident alien tax return, because we've got all the evidence that we need to file a return, and it's going to be proper and appropriate, and it would fly right through the IRS processing system. And we don't have to put ourselves in a position of saying, well, we're taking this position, but we have no idea what the heck's going on. Okay, so non-residents, again, only U.S. staff. Okay, now, and this is primarily because we do have some foreign students, and what we're trying to do is help these people out. So a lot of our students might want to stay here and get a job after they get their education. So you're going to run into situations where people have been in school for 4 years, from a foreign country, and they extend that to do some work experience, and then all of a sudden, at some point, maybe they hook on with somebody and they get a green card. They get a green card and they are going to be deemed to be a resident. Then you have to go to a Form 1040. If they're non-resident and you only report U.S. income, then you can file a Form 1040 NR. And that's what we want to do. We'll file a 1040 NR, probably the wrong form. The other kind of tricky situation is, this is tax, right? So nothing's going to be straightforward because we have a general rule and then we need to look around and figure out, well, how does it really work? So we've got this substantial presence test. And the substantial presence test is kind of like this, right? If the person is here physically, that's their body is here for 31 days during this year, and they've been physically present for 183 days during the current prior 2 years, then that person meets the substantial presence test. And if you think about a student that comes I'm not sure they're going to get there. Yeah, well, let's see. A student that comes in, when would they come? Probably August or something, September, when do we start? September, right? I don't think there's 183 days. Let's see, September, October, November, December, 30. There's not 183 days there, right? So the first year the person comes, if they're a freshman, and this is their first time in the country, non-resident, they can't possibly meet. I guess I'm wrong. Yeah, I don't think they can meet that test. What do you guys think? Because I didn't think about this before. They're here 31 days. Clearly we got that, and 183 days, but I don't think they get 183 days, right? So that freshman, I think we're safe in saying, is a non-resident alien. Okay, but now they're a sophomore, so they've been here for maybe however many it was, 120 days the first year. Now they're here the whole year. Now you can apply this test and you can say, oh, good grief, that person meets this test. So if you're a sophomore, you're physically here for 183 days, you meet the physical presence test. Well, that means that you're a resident. That means that you file a 1040. But there's an exception. And the exception is for, the exception is for students. And the students are on, how many people here are from a foreign country? And how many people are on an F1? My goodness, this is very applicable, right? So the point I guess I'll make here is, if you're a student on an F1, there's a special rule that can apply to you. And that special rule says you can basically elect not to follow the physical presence. You can elect to say that you really weren't in the country for that period of time when you measured the time you were here for the physical presence test. So we have a special form for that. There's a form 8843. And this is going to be a very important form for any foreign student that comes to our site, because this form is going to be what they're going to rely on to say, I don't meet the physical presence test because I have an exception, because I'm a student. And the exception is going to apply for 5 years. So if you're here on an F1 visa, you get 5 years to be in the United States and claim what? That you weren't here. And why can you claim that? Because this form basically allows you to do that. So let's see if we've got this right? So we've got, now, most students that we see will be on F1s. What if you see an F2? What does that mean?
A spouse.
Very good, spouse. What if I have a J?
Scholars.
Very, very good, right? At J1 is normally the scholar, J2 would be the scholar's spouse. There are different rules for people here on a J visa than on a F visa. So let's be clear about this. We are not visa policemen. We are not, part of the federal government. We're here trying to help people comply, actually, with your visas. Because I think some portion of your visa says you should be in compliance with the laws of the country you're trying to visit. Well, what's one of the laws of the United States? You have to file an income tax return if you have income. That's our only job, right? So we don't talk to immigration people. We make decisions based on the data that we have in front of us, and we move on that way. Okay, so what else do we need to get off of this slide here? So this wait here, if you will, of all of those days that you were here physically will work for 5 years. Everybody got that? What if it's more than 5 years? And how does that 5-year rule work? The 5-year rule says any part of 5 years. So if they come here in December and they're not going to start in January, that December counts as a whole year. All right, so if it's any part of 5 years. If you're here longer than that, then you will be deemed to be a resident, because why? This exception won't apply to you anymore, and you got to go back to the physical presence test, and you need that, so you'll be a resident. Then you have to file Form 1040, worldwide income. Okay, any portion of a year, oh yeah, we got that, okay, good. Teacher, scholar, J, oh, very good. Were you reading that slide when I asked that question? You should have said yeah, because that's what good students do, right? If I ask a question and it's on a slide, you can say, oh good, I nailed that one. Simply because what? You were paying attention in reading the slide. Okay, so I think that's it. Now, we do have teachers and we have prepared teacher-scholar returns here before, and we've had interesting situations that come. And I've been doing this a long time, and I can probably share with you people, the more you know about a person and the more you know about their tax life and their financial life and all that kind of stuff, some of these stories become stranger than fiction. I mean, these people have all kinds of stuff going on behind the scenes that you have no idea that's there. The more you talk to them, the more strings come off the little ball there, and you got to deal with all this stuff. All right, so having said that, we have some professors that come to us, Lamont School of Music, we have some people from the biology department. They're in J status, and they're teacher scholars. There's some rules, and we'll just go through the basic ones here. And that is, the teacher scholars will be exempt if they have been in this country for no more than 2 out of the last 6 years. So what does that mean? I think that if they're here for 3 years out of a 6-year period, then they cannot rely on this rule to say that they're essentially not here, so they're non-residents. So if the scholars are here for any portion of 3 years out of the last 6, we're going to make them residents also. And just one quick story. If we call them a non-resident and we utilize treaty provisions to exclude a lot of income from their gross income, and so for that 2 years we exclude, and they say, I didn't get my paper in on time and I need to be here in January to get it submitted and basically to an editor so I get it published, so I get credit for being here. They're here in January, oh my gosh, what's that, 3 years? Now basically they have to be a resident. Some of these treaties have clawback provisions. What's a clawback provision? If we gave you a benefit in year 1 and 2, and you don't follow all the rules in 1 and 2 and you extend, guess what? You don't get the benefit of 1 and 2. Well, what does that mean? That means the $100,000 we excluded in year 1 and the $100,000 we excluded in year 2 are picked up when? Oh, you just broke the rules, so you have now $200,000 of income. How about that for a surprise? Okay, so what I'm trying to enforce upon you is that we need to follow the rules, and we need to have authority for the positions that you're going to take, because some people could get very excited. And it's not our fault, as long as we're doing what? Relying on the rules, right? So we gotta, and if you guys ever have a big dollar situation and you're concerned about it, you got these people, there'll probably be some other people in the room also. It's okay to have a little huddle and say, you know, what are we gonna do about this, right? Okay, so that's that. Anybody have a question on that? Gotta move this on because we have a lot to do. So, for people to utilize these rules and still be non-residents, even though they're here physically, they have to tell the IRS about that on this Form 8843. Some of you probably filled this out already. When you set up your preparation, let's say, system, somebody should be coming in the door, and one of the first things they should do is run into a table, and on a table there should be some of these forms. And the person who's a non-resident alien needs to sit down and fill out this 8843, right? Now the important thing is they only need to fill out their students, so they only need to fill out, I think, part 1. And if we do our jobs right, we'll have some of these 8843s already pre-filled out. We'll take a yellow marker and we'll say, okay, if you're a student, fill in this one and this is what goes there. And so it makes it really easy for people to do it themselves. The second thing is you need to fill out what? Part 3. So if the student's going to use an 8843 to exclude those days, they need to fill out part 1 and part 3. Okay. The form must be completed even if an income tax return is not filed or required to be filed. Why is that? Because you've got to worry about the physical presence test. You may not have any income this year, but what? You might have income next year. And if you didn't exclude those days you were physically present here in the prior year, arguably those count for physical, then you're going to be a resident. So we want everybody to fill out an 8843. And it's not only that, but we want the spouse to fill out an 8843. Okay. What about that 8843? We're just going to, Aaron, we just print that as part of the return that we do for people, right?
Yes.
Yeah, and so they just file it along with their income tax return. And that works, and that's going to be due this year. When is the due date this year for filing income tax return? What is it normally?
April 15th.
And what happens if April 15th is on a Sunday?
Post office Monday.
Then we go to Monday, right? What happened if Monday's a holiday?
Tuesday.
Tuesday, there we go. So we got, I think it's Emancipation Day or something like that. It's a national holiday, or at least in Washington, D.C. So this particular year, your filing deadline is going to be April 17th, which I think is going to be on a, if I'm not mistaken, on a Tuesday. Okay, so that's that. So the return is going to be due on a Tuesday. The 8843 is going to be due on a Tuesday. And if you file this in our return, we'll put it all together and the person will send it off and they'll be safe. Okay, got that. What happens if they don't have any income? They don't have to file a tax return. We said you still want to file one of these 8843s to exclude those days on a going forward basis. So when is that return due? It's going to be due June 15th. It's in the slide over there, right? It's going to be due on June 15th. I would suggest that if anybody comes to our site and they're in our site and they're here, have them do an 8843 and just send it right in and get it done on April 17th, and then you'll be done, even if they don't have any income. Any questions on that? Spouse should do the spouse and dependents. Holy cow! So do we have spouses and dependents come to our site to get their tax returns prepared? The answer is absolutely. Some of these kids are pretty old, some of these kids are pretty young. We have people come back every year because we do a good job and they bring us cookies or some things or whatever. And so they're thankful. Why? Because you're taking a big burden off their shoulders because they don't want to do this and they don't know how to do this and they're a little bit concerned about it, so they're coming to you to get some comfort. Okay, so if they got dependents, we want those guys to file one of these 8843s also. What is this little note at the bottom of this slide? Not necessary if the dependent is born in the United States. Why is the 8843 not necessary? The person was born in the U.S. The person's born in the U.S., what are they?
Citizens.
U.S. citizens. What's this 8843 about? Trying to not be treated as a citizen or a resident. So if you're already in that bucket, you don't need to file this form because you're going to be probably a resident and a citizen in that case. Okay. Okay. So that's just it. Filing status. Okay, got to move this. Unmarried students file as what? Single. Ha. Not too hard. This is the hard part. Married students file as married, filing separate. Purpose for having this little block of information in here is because the rules are different for non-resident aliens. Non-resident aliens cannot file a joint return. If they're married, they're going to file a return, and it's going to be married, filing separate. We don't have any options on that. Exemptions. Non-residents do not get a good rule here either. They do not get exemptions for, as a general rule, they do not get exemptions for dependents. This is a sad story. What if we have two people from France, they're married, they come here, and they're getting a degree at DU, and they have a child, and the child is born. They come to our VITA site, and they say, okay, I'm married, so I have to be married, filing separate, but my daughter was born here, so I want to put her on as an exemption because she's a citizen and she's born here. Get her? No, I think it's sad, but I think that's the right rule. Okay, I shouldn't say the right rule, I think that's the correct interpretation of the rule that's already there. Okay, so now we do have some exceptions to that. And if we have people from Canada, the contiguous countries, Canada and Mexico, South Korea and India, may under certain circumstances be able to take those dependency exemptions. So there's 4 exceptions, the contiguous countries, South Korea and India, 4 exemptions. So just kind of make that note because we're going to go through some problems and we're going to have some dependents and we're going to have to take a look at what countries the person's from so we can figure out whether we can take those dependents or not. Okay, now this is another situation, right? We've had this situation. Person comes from Brazil and finds an American person that they like. They fall in love and get married. Well, they get married. The person that was here is resident, right? Person from Brazil, maybe non-resident. They can, if they want, elect to file a joint return because the person in marriage is a resident that's here. What that means is you got to pick up all of the worldwide income of the spouse that came from Brazil. So everybody see that. That's the big distinction. And so we don't know what the guy was doing, or gal, whoever it is from Brazil. We don't know what their family's doing. We don't know what investments they have. We don't know where they are. So we have filed a return like this, but we did married, filing separate. So the person from Brazil was here, married, filing separate. We applied the rules and said he's a non-resident. All we did was what? Report his U.S. income. Whether, you know, and he may have gotten a good deal that year, but I'm not sure on a going forward basis what they did. But we had no idea what he had in Brazil. I can tell by looking at the guy that he was not from a very poor family. Okay, so that's what we did. How about credits? This is going to be a broken record. This is not a good story for non-residents. Non-residents get very, very few credits, if any credits. Most of the credits you guys are going to be dealing with are going to be the earned income credit and educational credits. The foreign people don't get either one. You know, if you're going to be reporting foreign income so that the foreign tax credit would be applicable, you probably need to check with the directors to make sure that return's in scope. And I leave a lot of discretion to the directors, how comfortable they are that they get the right answer. A lot of times your reviewers, you'll be preparers to start with, but you return and the person will go to a reviewer, the reviewer will look at it and then approve it, and it'll come up front to get printed out, and there's a whole process in terms of packaging up some paperwork to give that client so that they can mail their stuff away and get the job done. But you might want to think about that one. Okay, no child care credit or dependent credit as a general rule, because why you don't get it as dependent, so you don't get credits for them. Okay, what income is subject to U.S. tax? Effectively connected income. These are just some big words, and what this means is effectively connected means it's going to get taxed at the ordinary income rate, the same rate schedule you and I or any citizen or resident uses. If you have some non-resident aliens and they have some non-effectively connected income, what is that? Dividends, capital gains, interest. That's going to be non-effectively connected, and there's a treaty. And you've got this little 4011 package here. So this is basically what we're going to use for our treaty information. And we will, now if you have not effectively connected income, we may have to go do some literature either online or over in my office. We've got a whole series of CCH, the Standard Federal Tax Collection. And we can come up with what the right answer is. If you're from some country, what's the effective rate for non-effectively connected income? If we can't find a treaty provision, it's 30%. A lot of times you can find a treaty provision with a tax of 15% or 10%, some other percent. So each treaty is kind of negotiated on its own. I don't think we have to worry about that too much, so we're going to move on. If you do, I'll ask again. You guys run into that very much?
No.
Okay. So if you do, there is a place on the 1040 NR, and you can basically report that in the 10R and on the 1040 NR, and you compute the tax on page 4, figure out the taxes on the dividend income, pick up that tax, put it over on the second page, and add that tax onto their regular tax, and that's the total tax that they pay. Okay, now this is the last one that's interesting. Interest income from a U.S. bank is basically going to be excluded from gross income of a non-resident. So interest income from a U.S. bank. Why is that? My own personal view is we want to encourage people to get into the financial system. And if you have a bank account, then that means that the banks have numbers on you that can identify you, and that's to be encouraged by our country. And so to kind of give the benefit to the people who do register with the bank, we're going to let them earn interest and not tax that interest. So interest from a U.S. bank for a non-resident is excluded from their gross income. Okay, wage income. Okay, so now we're saying if the people are here on a visa, a lot of visas say you can't work. Some visas say you can work. Some visas say you can work a lot. I'm not sure exactly what they say, but I'm not a visa kind of guru, right? I'm going to think if a person comes to me and they say, hey, I'm here and I work and here's my W-2, I'm going to say, okay, and I'm going to file the tax return, right? I'm not going to look at the visa and say, I wonder if you should be doing that. I really don't care. What's my job? Process. Take the information that has been recorded in the U.S. systems, get it on return, and get it back into a U.S. system someplace else. So I might as well say this. If a person brings to you a W-2, and there appears to be some kind of an error or something like that, it's not up to us to correct that error. So if the person brings us a W-2, we're going to take the numbers off of the W-2 and we're going to put them in a tax return. And we're going to file the tax return. And if there's a problem when that tax return is filed, who's going to find out about it? The IRS. And what are the IRS going to do? They're going to track that all the way back and come to us and say, did you change that? No. Boom. They're going to keep going until they get to where the person who prepared the W-2. Because what we don't want is we don't want the IRS coming to us saying, what did you do? And why did you do it? Because then that's messy. It takes time and you have to write letters and memos and you say blah, blah, blah. So we don't change numbers on 1099s and we don't change numbers on W-2. We just put them right off the W-2 and right on the income tax return. Okay, let's see now. So we have these people working. Yes, they can work either on campus jobs. You'll find out that people are real smart. This is like an entrepreneurial wonderland, right? Where if you're really smart, you can go find jobs all over the place and make money. Or be careful, because if you find in that job, what have you done? If you're holding yourself out as an independent contractor, whoever you're working for should pay you, and if they pay you money, what else should they do? Give you a 1099. So, so we need to keep track of all of that stuff. That's just how it's supposed to work. And so this is the last part that I'll talk about here for wage income. Some of you have taken income tax classes, and so we have an income tax, but we also have something that I call employment taxes. Right? So this is FICA, let's see, Federal Insurance Contribution Act. FICA taxes are paid. It's about 7.65% of wages that employees earn. That 7.65% really goes into our Social Security system, in our Medicare and health insurance system. If you are a non-resident alien, somebody has said, hey, you're not going to be around to get Social Security, so we're not going to collect it from you. So if you're a non-resident alien, you do not have to pay Social Security taxes, which again is 7.65% of whatever wage amount that you earn. So we'll talk about that, I guess, in a little bit. Teaching assistantships. So the rule is, if you get a scholarship, it's not income. However, if you're required to perform services to get a scholarship, that becomes income. And so we've got issues around here in terms of you know, are we doing it right? Is DU doing it right? And here's my answer to that. I don't care. So what am I saying? If they bring me a W-2 from DU, what am I doing? Putting it on the tax return, right? So this bottom line says, whatever the DU payroll office does is what we do. They make the decision whether that's income or no income that comes to us, and we just say, we're pulling it right off of that form, right? We're not making any decisions. What do I say? They decide, we report. Good. Scholarships. Okay. Now, if you're a foreign student, well, even if you're a U.S. student, you're allowed to exclude scholarships from your gross income. Now, the problem is scholarships for tuition and books might be excluded, but if you have tuitions for room and board, we have this with some of our varsity athletes, they get a full ride scholarship so they pay no money, right? And that, not only do they pay no money, but the school pays for their room and board as well. So the issue becomes, does the amount that the school pays for room and board become income? I think the answer is yes. Okay. Now let's see what else. Let's see, tuition. I think that's probably the big deal there. But we can take a look. The pub says Code 15. Let's take a look at this thing for the first time. On page, because this is the old one, I think not the old one, okay, the old one used to be smaller. This is a new version of this thing. Yeah. So if you look on page 5 of this publication, you're going to find that there are treaty provisions for scholarships. And so you may be able to take advantage of. This is Income Code 16. It's up in the upper right-hand corner on page 5. And it says, okay, this is scholarship and fellowship grants. So the welcome, how many people have had a tax class? Have you had a tax class? No tax class, huh? Tax class? I would say, so you have everybody here, right? The admin people and all that, right? Because I don't think that you should be doing tax returns if you haven't had a tax class. Right? Good, okay. Okay. What I'm saying is, welcome aboard, because what you learned in your first tax class is, oh my goodness, there's more than income. There's different kinds of income. There's different revenues coming in. You have to identify what that revenue stream coming in is to see if it's kind of special. Here's another one of your revenue streams, right? It could be scholarship money. And then for U.S. purposes, if it's room and board, we could say, hey, income. But you might want to take a look at this Code 16, treaty benefits for scholarships, and see if there's any kind of a special treaty provision that may apply to that student to exclude that scholarship from their gross income. Okay, so let's just move on. And this PowerPoint now is probably incorrect, because I think this is now what? Code 60. Deductions. Okay, so moving down the tax formula, collected income level. Deductions. Non-resident aliens cannot generally utilize the standard deduction. Oh, good grief, what does that mean? Can't use, that means they get stuck with itemized deductions. What itemized deductions do they get? State income taxes is going to be one. Personal taxes that they pay to the state. If anybody has a car and you put tags on your car, the motor vehicle department is going to charge you money. It's going to be an ownership fee. That's going to be a personal property tax that would be deductible. You get a deduction for charitable contributions. Notice on here, I don't think that you get a medical expense deduction. Right? And this thing says that you get miscellaneous itemized deductions. So the point that I'm making here is you got a Schedule A that you might be familiar with from filing tax returns for individuals. That's going to be really skinny down. Fewer rules are going to be allowed for non-resident aliens. Are you using TaxSlayer this year?
Yeah.
So TaxSlayer probably won't let you put some things in, and you might say to yourself, well, TaxSlayer's stupid, I want to take this. And you know, by the time you go back and do your research, TaxSlayer may not be wrong all the time. You might have somebody looking at that and say, maybe you shouldn't be doing what you're doing and you're reading the rule the wrong way. Okay, so what else do we have here? Those are deductions. Exemptions. We talked about this already. Normally, a person is going to take themselves as a deduction, as an exemption deduction. You get one. Okay. Oh, that, and that's in the case that you're not being claimed, that person, that non-resident alien is not being claimed by somebody else on somebody else's return, right? So we're just talking about a student that's here, their parents or someplace else, they're going to take themselves. Let's see. Okay. Now we need to take a look at some other countries, right? Canada, India, Mexico, and South Korea. I'm not sure exactly what page this is on, because these things, I just received this today. The one I was using is last year's, and it's all completely different formatted. But I think it's probably got the same information. So if you look, yeah, exemptions is on page 9 of your 4011, and it's going to say, generally non-residents can claim only one personal exemption. It's going to go on to say Canada, Mexico, India, and South Korea may be able to claim another one, right? Let's see what that says. From the following, may be able to claim their spouse and children as dependents, right? So for those 4 countries, that's your authority, basically, for taking the deductions on those returns. Okay? Okay, so that's it. So again, that's page 9. Tax treaties, we've already been fooling around. That's a publication that the service puts out. It's the 4011 form. You should always have one of those. So when you come in to prepare tax returns, you always want to have one of these at your side or very close so that you can refer to it. The other thing, we used to have some information that the service put out. They had a lot of flow charts in it. Is that one of these things, Aaron? Or,
yeah.
okay, so this is where kind of, yeah, so this is 4012 now. So for your U.S. people, this is great because they'll give you a bunch of flow charts and you can kind of follow your way through to figure out what the right answer is. So you want to have that available as well. So you can answer some questions without having to get up and bother everybody to go find them. Okay. And then, so this 40, we already talked about scholarship stuff. We have to also deal with this 4011 for wages that, I want to say, students earn, because we might be finding some treaty provisions that deal with wages. Okay, so we'll talk about that. Compensation income, here it is. Okay. So now what are we talking about? Form 4011 provides this type of income. Let's see now. I want to look at this and see. You have general immigration bars, blah, blah, blah. Income on campus, subject to U.S. tax. So if they earn it here, we got to tax it here for treaty leave of this type of income. So this is wages. So I want to make sure I got the right page in here, because what do I have there? Tax code 20. Those things change as well. So if you look at wages, it's going to be back a couple of pages, I think. Yeah, we're talking about studying or training, so that's going to be code 20. What was scholarships? Anybody remember? Was it 16? Code 16, I think. I was just looking at the code, so if you're on page 7, you look up here in this corner, it's going to be code 20. And that is going to be benefits that I think that you earn while you're in that status. Now, if you are, let's say, on a J visa, you're going to go over to code 19, which is on page 6. There are going to be different treaty provisions for people on J visas. So you've got different treaty provisions and different kind of income, and what this publication does is it kind of combs through all those treaties and just kind of gives you the data set you need so that you can operate in very few pages. Okay, so has everybody got that? So what did we say? You got income in U.S., we're going to pay tax on that income. We might be able to exclude some based on a treaty provision. That's where we are. Okay, so if you're a non-resident student and you get a job, what did we say? You're not supposed to pay FICA taxes, employment taxes. If you get a job and you don't tell the employer that you're from a foreign country and you don't have to pay FICA taxes, that employer might do what? Hire you, put you in the payroll system as a person. If they put you in a, well, a person is a person, that's good. You'll be a person, you'll pierce your name, but I'm saying they're just going to treat you like any other person. What is their system designed for? U.S. persons. But if you're not a U.S. person, you get treated like a U.S. person, what's going to happen? Their payroll tax is going to be withheld. It's bad. That's 7.6%. That's your money that you're letting them withhold. And you can say, not a problem. It's my money. I'll just get it back. Well, good luck. Have you guys tried to deal with the government yet? Think of the government in your own country. How would you like to do that? You owe me $17.60. Can I have it? Well, you know, it's a lot. It's a big fight. So my point is, tell people to get this form. There's a special form, whatever this form is, 8233. And what it'll do is it'll tell the employer that don't withhold employment taxes on me. And then you're in great shape. That will tell the payroll system to give you like a 1042S instead of a W-2. So that triggers a lot of different things. Now, if you don't do that, or if you're afraid, if you tell them that you're not subject to employment, they won't give you the job, or whatever it is. If you get stuck in that system and they withhold employment taxes, there's a process and a procedure you have to go through to get those taxes back. And I'm not sure, yeah, here it is, right here, kind of at the bottom of this thing. All right, so this is called an 843. Okay, to file this 843, the first thing you have to do is, if you want your money back, and it's your money, and you can get it back, the question is, how hard do you want to fight to get a fairly small amount of money back? You got to go back to your employer, and you say, Mr. Employer, you basically took some employment tax out of my salary, and you shouldn't have, so I'd like for you to give it back to me. Your employer is going to look at that and say, oh, good grief, that means I got to file an amended employment tax return from my company to get you $17.16. Go away, right? If it's still your money and you can get it back, but then what do? Then you go to the government. Here's a form. I went to my employer, he said he's not going to give it to me, so you give it to me. This is only a one-page form, so you look at it and say, not a problem. Okay, what's on the back of that form? Instructions. What do those instructions say? Attach 13 items if you want your money back, going all the way back to where are you from, what do you got for a visa, and there's a lot of numbers I don't even understand that you guys know about. And they want it all. So they want about 4 or 5 or 6 documents that say, you're in the country, you're out of the country, blah, 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 and then okay, we'll get it. But my point is, it's a process. We do not file 843s at the BITA site. We give people the 843 and we give them the instructions and we say, good luck. I'm not sure if you guys have ever heard an American colloquialism, you can't fight at City Hall. Anybody ever hear that? Well, that's not true. You can fight City Hall, but it's really, really, really hard. And you have to try really, really, really hard. And then you might win. You will win if you stick it out. All right, that's enough on that. All right, unusual treaty provisions. Canada, kind of cool. I could earn $9,000 if I'm from Canada, not resident. I earn $9,000 and I pay no tax, none. It's all excluded. But they're paying me like $1,000 a month, and so I'm going to work for 11 months. How much do I make? 11,000. Now, how much is subject to tax? 11,000. If I work for 9 months, or 9.5 months, or 9 3/4 months, I don't get to that 10 grand. Nothing is taxable. Now I hit the $10,000 marker, and everything becomes taxable. Okay. So it's just a cliff provision. So this is just a kind of another rule that's out there. India. We used to have a lot of people here from India. And India is a very, I want to say, unique country. Because in India, we were going to allow those people to take the standard deduction. So India is the standard deduction, everybody else does not. Everybody else gets stuck with what? Just itemized deductions on Schedule A. Got it. Okay. So what else do we have here? Another treaty provision. China. If you're a scholar from China, you can exempt all of the tax that you earn for 3 years. So you can be a teacher and come over here and get 120 grand a year teaching for 3 years, and what are we going to do? Exclude, exclude, exclude. And what are we going to do? When we file that third year return, we're going to say, please don't overstay your visa, right? If you overstay your visa, there's a consequence, right? Okay, so that's for those guys. What about students from China? There's a $5,000 exclusion from gross income. You guys should be able to find that in this 4011. Where's that? The other thing I will tell you is that if you exclude something from the tax return, you need to put in the the treaty article provision that tells you can exclude that. And on your Form 1040NR, there's a specific place to put that in. It says we're excluding $5,000. Why? Because we have a China treaty, and the China treaty is going to be 20C. I'm not even sure the return preparation package, does it like parentheses? I'm not sure if it does or not. If it doesn't, put 20 space C. We've had maybe 3 returns rejected from the IRS, and 2 of them were because somebody forgot to put what? An exclusion provision out of a treaty. And it's a big mess. And you know, if you get letters from the IRS, it's just sort of like, it makes your whole day a bad day. Okay. So that's what we're doing. Okay, now look at that though, right? Unlimited, that means a person from China can be here a long time and exclude $5,000, cool. Forms, we're gonna do the 1040NR. Now, in the exam, we're gonna do some 1040NR EZs because that's what they provided, and you have to answer the questions with what they provide. So we're gonna let Erin kind of talk about what you want to do. Okay, so I think that's...
Okay, we're now going to start the foreign student test. So, question 1. Hans entered the U.S. on December 15, 2012 in F1 immigration status. He had never been to the U.S. before, did not change immigration status during 2017. For federal income tax purposes, he is a non-resident alien for 2017. That is true. If you count the years, he's been in the U.S. for 6, which is over the 5-year limit. So question 2. Afshar is a visiting professor at a local university. He was a graduate student from August 11 to July 2013 in F1. He re-entered the U.S. on December 20th, 2017 in J1 immigration status. Is he a resident alien for 2017? The answer is true. He has been in the U.S. for more than 2 years out of the past 6 years. So 3. Juan served as a visiting scholar in F1 immigration status from December 2011 through June 2014. In January of 2016, he returned to the U.S. as a graduate student. For federal income tax purposes, he is a resident alien. That is also going to be true. 4. Emil came to the U.S. in F2 immigration status with his wife on August 20th, 2016. He has not changed immigration status. For federal income tax purposes, he is a resident alien for 2017. It's going to be false. So, Tamara lived with her parents in F2 immigration status in the U.S. from August 2007 to June 2011. She returned to the U.S. to attend college in F1 immigration status on May 1st, 2016. She does not need to file Form 88 for 2017. This is going to be true. If If you add it per years, she has been in the U.S. for more than 5 years, which makes her a resident. And residents do not need to file Form 8843. 6. Isneo entered the U.S. on August 10, 2011 in J1 student immigration status. On December 2nd, 2015, her husband Aiden joined her in J2. He is not electing to file jointly with his spouse. Aiden does not need to file Form 8843. This is false. So even though he does not have any income, he still needs to file that form. 7. Isneo and Aiden from Christian 6 had a child who are here in the U.S. Do they need to file a Form 8843 for the child? That's going to be false. The child is a U.S. citizen, and he does not need to file the Form 8843. Flora and Thomas have been in the U.S. in F1 immigration status since August 2016. Their son, Lorenzo, joined them under F2 status in May 2017. Flora and Thomas must file Form 8843 for Lorenzo. That is going to be true. So, Lucas is from Austria and is a PhD student in astrophysics who is going to defend his dissertation in June. He arrived in the U.S. as a student in May 2016. Is he a resident alien for tax purposes? That is going to be false. Okay, so for tax purposes, Arav is required to be a resident alien since the company issued him a Form 1099 miscellaneous. It's going to be false. The facts determine whether he's a resident alien or not whatever forms the company might issue him. So question 11. Mai is a nursing student from Singapore. Mai must file Form 8843. Since she's only required to file Form 8843, she has until June 15, 2018 to file the form. That is true. So, Alex entered the U.S. in J1 status in August 2016 and lives alone. His wife, Maria, could not accompany him because he had to care for his ailing parents. Alex can file as single because he did not live with his spouse at all during 2017. This would be false. He is still married, so he still has to file as married, filing separately. So 13. Evan and Balda were married in June 2015, and they both entered the U.S. in J1 immigration status to complete their graduate work. They had a daughter in October 2016. Currently, Evan Ba'ani lives in Omaha, where he is completing his graduate work. However, Balda left the family and moved to Atlanta in November 2016 and has not been heard from since. Because Evan Balda are still married, he cannot file using a single filing status. That is true. Okay, scenario 1. So this has us prepare Form 8843. For the sake of time, we're going to just answer the questions, but feel free to still look at it. So, question 14. On what line should Dolores report her most current immigration status? So that is going to be line 1B. So going back to it, 1B says current non-immigrant status. If your status has changed, also enter the date of change in previous status. That is only going to be if it changed. If not, they can just fill out type 1A. Okay, on line 4B, how many days exempted presence did Dolores have for 2017? So if you read the facts, it says that she has been in the U.S. for the entirety of 2017. So she is going to want to exempt the entire 365 days. So what sections will Dolores need to complete? That's going to be parts 1 and 3. So part 1 is general information that everyone fills out, and part 3 is just for students. Okay. What is the due dates of Dolores' Form 88 for the tax year 2017? So the facts say that she did not have any income, so she has until June 15th, 2018 to file her Form 8843. Okay, question 18. Monica, who is a non-resident alien, is in the U.S. in J1 immigration status, spent $4,000 on qualifying tuition and education expenses. She is eligible to claim the education credit on her tax return. that is going to be false. Non-residents are not able to take education credits. So, Ron received $492 of interest on his personal bank account. He's an international student from Ireland. He arrived in the U.S. in 2017. His interest income is taxable in the U.S. That is going to be false. For non-residents, personal interest income is not taxable. So 20. Susan and Jeffrey are married, non-resident alien couple from Ireland. Both are in the U.S. and F1 immigration status. Arrived in 2017. They paid $1,500 in child care expenses for the child who is born in the U.S. and is a U.S. citizen. They will not be able to claim these expenses on a U.S. tax return. So that is going to be true. So even though the child is a U.S. citizen, they are still non-residents and not able to take the child care tax credit. So Lee is J1 student immigration status from China. She has earned $4,995 in wages. Her wages are reported to her on a Form 1042-S. The year will have to report these as taxable wages. So let's look at Form 4011. So go down here to China. So they're able to exclude $5,000 of income. So will she have to report these as taxable wages? These are going to be false. So Ron is here on J1 student immigration status as of August 1st, 2017. Under the terms of his visa, he is permitted to work in the U.S. So he must request an I-10 to report his income from wages. So that is going to be false. So we took this to mean that, so as terms of his visa, he's permitted to work in the U.S. We took that to mean that his visa, such as a green card, gave him a social security number. And so if he has a social security number, he's not going to need to request an I-10. So 23. Vidad, in F1 student immigration status from Bosnia, is on the basketball team. He arrived in the U.S. on June 18, 2017 on a full athletic scholarship that includes payments for his room and board. The amount of his scholarship for room and board is taxable. So going back to the 4011, under treaty benefits or scholarship or fellowship grants, you see that Bosnia is not listed, so that means there is not a tax treaty with Bosnia and the U.S. So the amount of scholarship for room and board is taxable is going to be true. So Hira is in the U.S. in F1 immigration status. He arrived from Japan on August 6, 2014. He worked in the library and earned $2,400 in wages and had income tax withholding of $50. He needs to file a Form 8843, but since his wages are below $4,050, he's not required to file a Form 1040 NRZ. However, it is in his best interest to file in order to receive a refund of his federal income taxes withheld. This is true. So the next few sections requires us to fill out a Form 1040 NREZ. For the sake of time, we're only going to prepare the income sections. And so, May Montry, a citizen of Israel, came to the U.S. in F1 immigration status on August 1st, 2015. She has remained in the country since then as a full-time student. She was born in 1998 and is single. She began working at the university in 2017. She filed the proper withholding and treaty forms with the university payroll office before beginning her job. She has not filed a U.S. tax return in any prior year. Okay, so if you look down here, this is her W-2 and it lists $7,500 in wages. And here's her 1042-S, which lists $3,000 in wages. So her total wages for the year would have been $10,500. But because she is from Israel shows that they are able to exclude $3,000. So we only need to report this $7,500 as being taxable. So, filling out her return. So her taxable wages are going to be the $7,500. Then income exempt from the treaty is going to be $3,000. Okay, her itemized deductions. So she's able to itemize her state income tax withholding. So that's $75. Okay. So she's able to claim her personal exemption, 4,050. That makes her taxable income 3,375. So she is within the 10% bracket, so her tax is only going to be 338. And so she had, let's see, $750 withheld. So her refund is going to be $412. Okay, this is the Schedule OI that should also accompany the return. So normally this should be filled out. And then J1 is your, you treat her the treaty benefit information. Back to the questions. 5. So Christian 25. What amount is entered on line 3? That is C, 7,500. What amount is entered on line 10? It's going to be 7,500. What amount is entered on line 14? 3,375. A. And what amount is entered on line 21 is 750. And does May have a refund? Yes. Okay, moving along. So Sai Singh, a citizen of India, came to the U.S. as a student. He entered in F1 immigration on August 3rd, 2014. He has remained in the country since and is a full-time student in the local university. He was born in 1992 and is single. He followed the proper treating and withholding forms from the university payroll office before beginning as a graduate research assistant in 2017. Okay, so you see here he got a W-2. His total wages and income tax withheld. He did not get a 1042-S, but that is okay. Now filling out his return. So first it's important to note that as he's from India, he is, so Indian students are the only students who are able to take the standard deduction instead of itemizing. So that's just really important to remember. So, preparing his return. So he's going to put in 227,200. Okay. And there's no total income exempt for Indian students. There. Okay, so instead of itemizing his deductions, he's going to take the full standard deduction of 6,350. So, takes the personal exemption, gives him a taxable income of 16,800. Okay, and if you do the rates, his tax is 2,054. Okay, so he had $2,900 in withholding. Okay. So he has a refund of $846. Okay. Okay, question 30. What is the amount entered on line 3? This is D, 27,200. What amount is entered on line 11? This is C, 6,350, the standard deduction. What amount is entered on line 13? That is B, 4,050. What amount is entered on line 18A? C, 2,900. Then the refund is 842. Suman is a resident of Bangladesh. He arrived in the U.S. in an F1 immigration status on September 1st, 2016 as a full-time student. He is 27 years old and single. Okay, he has failed to respond to the university in time for them to issue a 1042-S for his treaty-exempt income. However, he is still entitled to his treaty benefit. So if you look at his W-2, you see that he has total wages of $11,560. But if we go to from 104011, you can see that Bangladesh has a maximum dollar amount limit of $8,000. So we're going to exclude that from his taxable income. So back to his 1040 NR. So in here we're going to enter 3,560. Then in line 6 we're going to enter that 8,000. Okay, his itemized deduction is going to be his state income tax, which is $110. Okay, he's entitled to the personal exemption. His taxable income is going to be negative. His tax is going to be 0. Okay, and he had $780 withheld. So he's going to get a refund of that entire $780. Let's go back down here. So 35, what amount is entered on line 3? So that's the 3,560. What amount is entered on line 13? 4,050. Okay, well, on which line will Simon enter his treaty benefits information? So that's going to be line J of the 8843. Then 38, can Simon claim a standard deduction rather than itemizing his state income taxes? No, he is not from India. Okay, moving on. Neo, an international student from Ireland, has a Form W-2 that shows amounts withheld for Social Security and Medicare taxes. He is an F1 non-resident alien for tax purposes. Which form should he file to receive a refund of these taxes once attempts to obtain a refund through his employer have failed? That's going to be A, Form 843. Question 40. Carlos and Sophia are from Mexico. Carlos is a scholar at a local university in J1 scholar immigration status, and Sophia is in J2 immigration status. Sophia worked at a local boutique in 2017. From W-2 shows Social Security and Medicare withholding. Sophia found her spouse does not have to pay Social Security and Medicare taxes, and she is not eligible for refund of Social Security and Medicare taxes. This is true. So even though her spouse on a J1 visa is not does not have to pay Social Security and Medicare taxes, she still does. So 41. Wei, an international student from China, received $10,563 of interest income from accountancy urban when he first arrived in the U.S. in 2014. What type of federal income tax does he need to file? That's going to be D. He does not need to file a return. Once again, interest income from personal bank accounts are not taxable for non-residents. So 42. Harold, his wife and son entered the U.S. for the first time in 2016. They are all residents of France, and Harold is the F1 immigration status. He won $500 at the local casino. What income tax return does he need to file? So that's going to be a 1040 NR. The short form, the easy form, does not have the line for gambling income. So, question 43. Charles Windsor is a visiting scholar from England. He arrived in the U.S. on August 28, 2016 on a J1 and was accompanied by his wife Camelia and his son Henry. Since his arrival, his second son, William, was born in the U.S. He earned $70,000 in 2017 from State University. When he files his federal tax return, can he claim his exemptions for his wife and children? No. Only South Koreans, Canadians, and Mexicans are able to claim personal exemptions. Stefan, a graduate student of physics from Sweden, is an F1 immigration status. He first arrived in the U.S. on April 18th, 2013. He needs help preparing his tax return. He has receipts from his donations to a local charity and wants to know where to claim them. He cannot claim charitable contributions on Form 1040 NREZ, and that is going to be true. 80 is the F1 immigration status from Indonesia. He entered the U.S. on September 2015 and enrolled as a full-time undergraduate student. Can he claim his education expenses on tax return? It's going to be no. Once again, non-residents are not able to take educational deductions or credits. So, Sipan is single, non-resident alien who began studying in the U.S. in 2016 in F1 from South Africa. She has wages of $6,700 interest income. Has wages of $6,700 interest income from her savings account of $230. She sold some U.S. shares of stock and she donated $2,000 to a local charity. So she's going to have to file a Form 1040 NR. Then 47. Some students and scholars may owe money with their tax return. Non-residents have which of the following options? It's going to be D, all the above. Non-residents have the same options as residents. So, GRD, who's from Turkmenistan, earned $9,248 in 2016. He had $195 withheld for state income taxes. He listed the taxes as a deduction on his federal return and lowered his taxable income for 2016. He received a state refund of $117 in 2017 from the 2016 tax return. He would include this refund on 2017 federal return. This is true. He received a benefit from itemizing his state income taxes, so he's going to have to report that benefit. 49. Teresa came to the U.S. in 2013 for a postgraduate study. She took out a student loan to help pay the tuition. She graduated in 2016 but remained in the U.S. for 1 year of practical training. She began to repay the loan on July 2017 and paid $49 in interest during 2017. She can claim this interest as a deduction. That's true. So non-residents are able to claim the student tuition interest deduction on student loans they took out while in the U.S. Then Frederick, a student from Malta, had $8,785 in wages reported to him on a Form W-2. Although all of his wages are excluded from the tax treaty, he is required to file a tax return. That is true.